the markets are still in that correction process that we talked about. Here's what you need to know before the bell this morning. Week before last, we had this big outside reversal day. An outside reversal day, and this is a bearish engulfing pattern if you know candlestick terminology, and it doesn't matter if you don't. We had a day where the market opened up strongly and then fell, and we had a big decline that day, and it completely engulfed the positive day that we had the day before. So that's that engulfing pattern that we're talking about here. And normally that's a very bearish sign and suggests that prices are going to go lower near term. The market did rally for a couple more days, failed to get back to that previous high, turned over, corrected. Last week, we took out that first level of support that we've talked about, that 20-day moving average, took that out. And then importantly, on Friday, the market rallied early in the day, and we were actually doing okay on Friday. Market was in the green. Things were looking up until about noon. And the market rallied right into the 20-day moving average from underneath that moving average, right? So we were below the 20-day, rallied up to it, failed, turned lower, and set a new low. And so that suggests now that really we're probably going to wind up retesting the 50-day moving average here, which is around 4,400-ish right now, 4,390. Right around there is going to be the 50-day moving average. That seems to be the logical next level of support. Now, whether or not the markets go straight there over the next couple of days, or we get a rally first and then another decline, who knows how the market is going to play out. Markets are decently oversold enough on a very short-term basis that we could see a rally, another attempt back at that 20-day moving average. Another failure there would just kind of confirm that we're still in this correction process. If somehow magically the market can rally back above the 20-day and then get to new highs, then this correction process is over. That seems a little bit unlikely just at the moment because, again, as we're kind of looking at things, we're kind of running out of earnings season now. We're moving into a little bit of a seasonally weak period of time, and so a bit more of a struggle here in the markets over the course of the next month or so would certainly not be surprising. Work off some of this more extreme overbought conditions that we've had in the markets on a longer term basis. Some of these big deviations need to kind of tighten up here a bit. So again, I would expect a little bit more turmoil. Again, nothing here suggests that we're going to have a big correction. Nothing here at the moment anyway suggests you're going to have like a 20% decline in the market. So that's not really the concern. The concern at the moment, if you want to call it that, is that the markets just needed to take a break. They've really gotten fairly far ahead of themselves. We've had 5 straight months of advances. So a month or two of a bit of a pullback, correction process, consolidation, certainly a very logical issue, and that would certainly give us a much better opportunity to put some capital at work on a better risk-reward basis for potentially another advance into the end of the year. Now, once we get into next year, all bets are kind of off. We'll see what happens when we get there, but again, lots of positive momentum right now, keeping markets intact. So again, look for opportunities to increase risk, but on a more selective basis when you get the opportunity to do so. That's what you need to know before the bell this morning.